cutting-edge tax planning could likely be more important than ever before. For the first time in about 3 decades, tax reform may be on the table.
The key to any successful retirement plan, you have to have a good and integrated tax plan.
So moving forward, giving your overall financial plan a fresh look or putting your first plan in place will be essential to reaching your retirement goals. Now is your time. Please welcome financial expert Joe Anderson to the stage.
So for about, 20 some odd years, they put layers upon layers upon layers of taxes. So when it first started in 1913, the tax code was 1% and it went up to 7%. Pretty good, right? 1% to 7%, it would be nice to have that. But then over the years, it got extremely complex. And then 1939 is when they kind of put everything together to establish the true code. With that, we had the first tax reform back in 1954. I don't know if you remember 1954, but the highest tax rate back then, anyone know? 91%. 91%. So if you can think of that, if you can imagine the top marginal rate of 91%, a lot of things happened. People started creating tax loopholes, right? Huge tax shelters, tax credits, huge deductions.
So will we get some kind of tax reform? I would say it's likely because of the Republican majority. But what will that be? It's anybody's guess because there probably will be compromises. Our current proposal, well, that's at the top. So you can see we have 7 rates. We start at 10%, that's the lowest rate, 15%, 25, 28, 33, 35, and the highest rate is 39.6. So that's where we're at today. So if we look at the proposed rates, now by the way, this is true for both Donald Trump's plan and the GOP plan. They're consistent with regards to the rates. 3 brackets, 12%, 25%, and 33%. In terms of itemized deductions, the Trump plan wants to keep all the same rules that we have right now, which is an itemized deduction is a personal deduction that you get to take against your taxable income. So that's like some medical expenses, state taxes, property taxes, charitable deductions, miscellaneous itemized deductions like unreimbursed job expenses. So all that would be the same, but what Trump says, he wants to cap it for married taxpayers at $200,000 and for single taxpayers at $100,000. Now let me switch over to capital gain rates because capital gains, this is when you sell an asset at a gain, an asset outside of retirement like a stock or mutual fund, right? You buy a stock at $20,000, it goes up to $50,000, you've got a $30,000 capital gain. So historically we've had special capital gain rates so that individuals would be incentivized to invest in our companies to create jobs. That's the whole idea. So there would be a lower capital gains rate under virtually all proposals. What we have right now at the very top, the current capital gain rate, there's a 0% bracket, 15% bracket, and then a 20% bracket. So what Trump wants to do is keep these rates the same as what they are, 0, 15, and 20%, right? But one of the differences in the Trump plan is he wants to start that 20% capital gain rate at the highest bracket, which we just, for a married couple, that's what, $225,000 of taxable income. For single, that's about $112,500. That's where you hit the maximum capital gain bracket. Right now, the maximum capital gain bracket is about $460,000 for a married couple and about $410,000 for single. So there's a change there. Now you get to the GOP plan, they essentially want to take the rates and divide them by 2. All right, another one, estate taxes. You've heard about this. When you pass away, your estate has to pay an estate tax when it's above certain levels, and that level right now is $5,450,000. So if you're to pass away right now, your estate's over that, then the IRS gets 40% of what's over it. You're $10 million over that, then the estate tax is $4 million. Right? The executor or your trustee has to make that payment. Now, if you're married, you get to double up on it, right? So it's about $11,000, give or take, that a married couple gets to pass to the next generation, tax-free. So what Trump is saying is, we don't like it, estate tax, right? Let's get rid of it. Let's get rid of it altogether. Things that we talked about. Obviously, we talked about Roth conversions. And there's a lot of you that should be doing Roth conversions, some not. But the nice thing about conversions, as Joe mentioned, is when you do a conversion, you can always undo it the next year if you turned out with too much. Tax loss and gain harvesting, that's obviously really important for your assets outside of retirement. We talked about that a bit. Maximize your deductions this year. We think taxes may be going down, so a deduction will be more valuable this year. Certainly charitable strategies, as I just mentioned, are a big deal, particularly this year with income rates higher. You definitely want to see someone on that one.
Thank you for attending Pure Financial's year-end tax seminar. To see what the tax code reform proposals could mean for your personal retirement plan, contact your Pure Financial advisor today. New to Pure? Sign up to be introduced to one of our certified financial planners at purefinancial.com/tax or call 877-222-6044. That's 877-222-6044. Pure Financial Advisors, trustworthy by design.